Welcome back, my passive income investors. I like to, woo, baby. Another dip day in the market brought to you by Jerome Powell getting grilled at the Federal Reserve meeting and treasuries going back through the roof. Not that I particularly care about treasuries, but I have definitely been buying the dip. And that's what we're going to be talking about in this video. We're going to be reviewing my corporate account, the broader markets, and some pretty large investments that I've been making within the tech sector. So in the clarity of the transparency that I truly offer to this channel, consider hitting that like button, folks, because if you're a Canadian, we're going to give you some in-depth knowledge into this corporate investment account, because currently today, this account is worth $62,475. My God, this is an impressive thing for me to be showing you, not as a bragging right, but purely as a place of coming from May, guys. When I contributed and first opened this account, I contributed about $20,000, which means I've contributed from my current working capital over 40 grand. And the reason that I am so aggressively focused on this account is because it sits in my corporation, which, if you are new to this, in the Canadian economy, the wonderful government of Ontario and the larger government, because every province is slightly different, the corporate tax rate is 3% on the first $500,000. If you take that discounted tax rated income and you invest it within the corporation, you're not going to get slapped with any kind of personal income tax. And then you even get corporate tax benefits from capital gains, from dividends. And I'm not going to be getting into all of that in this video. I just want to show you guys this is what I have been focusing on so much this year, and it is truly paying off with over 40,000 added to this account already. Let's see if we can hit 50 by the end of the year. Damn it, we've got a quarter left. So let's hope the markets can turn around and I can add a little bit more money, though I'd rather be adding it on these dips. So before we get into exactly what I buy, I've obviously contributed a lot this month. I think almost $10,000. I did pick up a Granite Real Estate Investment Trust, which I talked about in the past, not what I purchased today. And my Canadian stocks are getting absolutely obliterated, is I'm not really focused on dividends here as much. So I'm not trading down a whole lot, because what my total book cost in CAD sits around 14,800. I'm down about $260. Ideally, I would like to get these positions up a little bit more, get about $1,000 in dividends just to cover my basic corporate investment account fees and my kind of corporate banking account fees. But where the real juice, where the real gusta, that money, what I'm really looking forward to in this account is my US holdings and my growth stock holdings, for that matter, because in this account, unlike my tax-free savings accounts and my personal brokerage accounts, guys, I like using those as a secure backup income. So those are primarily dividend accounts. I don't think I hold any companies within my TFSAs or my RSPs that don't pay dividends, because again, I want to be able to tap into that if I need it at a tax-free way, because it's 100% tax-free income. Whereas this account, I can't draw against it without getting slapped with personal income tax and all other kinds of stuff. So I'd prefer to use this as a way of scaling my corporate accounts capital, because my business needs to grow. And what you need to do in your business is focus on scaled capital, not only from the working side of my business, but from the investment passive side of my business. So in here, I highly aggressively focused on what I truly believe are some of the greatest growth stocks that can offer me anywhere from a 20 to 30% return a year on average. And taking a look, Tesla, Facebook, Google. I mean, I've really only been aggressively adding Facebook and Google as of this month, guys. I added Facebook not even that long ago on the last dips at around 346, which we're down to 339. So if you waited, you got some capital. Facebook, great buying opportunity here. Google, the one that I added today, guys, picked up one share of Google at about 2,700 and I think $14 plus the $10 commission. So about 2,700 and what, maybe 20 something dollars under. Yeah, so right around there, like nothing crazy right now, but that was a hard buy. That hurt me a lot. I mean, that's a lot of money. I want to buy a MacBook, and that's literally like the price of a MacBook right now. So it's kind of crazy. I need to upgrade my equipment for my business here. But anyways, I couldn't help myself. I couldn't say no to Google's price today. So I picked it up, guys. I currently have about $13,568 sitting in Google, and Tesla's just been driving most of the accounts capital gains this year, sitting up 15%. I don't know how it's holding up in this market calamity, because usually when the markets pull back, Tesla pulls back the hardest, but clearly there's a lot of conviction, as I made this video the other day talking about FSD release coming out, and people are really bullish on Tesla self-driving software, giving some more momentum to the stock clearly. But overall, we're trading up 2,500 US dollars, which is why I always advocate toward investing, guys, because to be up 11% since May, these are some pretty good gains. You're not going to get this out of a savings account, and it definitely beats the inflation rate this year that's hitting about 4%. So if you minus the inflation rate of 4%, this capital gain here is really around what, maybe 8, 9% if I'm lucky there at the best. But yeah, so that's pretty good. That's pretty good considering my Canadian stocks destroy me, but that's because I hold those for dividends. So that's kind of where the corporate account currently sits here, guys. I'm very excited with how this has been performing, and I look forward to giving you guys some further updates. So let's just take a look at the broader markets, kind of what led me to these purchasing decisions, because for the first time in a little while here, I mean, since August almost, that the S&P has pulled back into that $300 range. Oh, since June. Since June, we're seeing VOO back below $400. It keeps hovering around this mark. So if you are looking for safer investments, the broader market index, pick it up today, baby, because again, it could drop farther, but this is where you want to start accumulating. My girlfriend picked up QQQM today. If you're more into those NASDAQ 100 growth stocks, which I really recommend for younger investors that need to get that growth behind them, that's a great place to start. Anybody in their 20s or early 30s. But just take a look at this, guys. Apple, Microsoft, all down 2-3% in a single day. When was the last time the S&P or VOO dropped 2% in a single day? Unheard of in these markets. I mean, it's absolutely staggering. Facebook down 3.7%. Google's pulling back up a little bit here, but it is trading down 3.7%. Just scroll down a little bit. The only stock I'd also recommend for dividend investors out there, J&J. Oh my God. At this price point, guys, take a look at J&J's chart real quick. Let me just pull this up. J&J, I threw this out in the group this morning. I said I would buy this in a heartbeat if you got some capital and you don't have exposure. Great S&P company to own there. Scrolling down, some of the Canadian stocks I'd be buying, Stag Industrial, GPR or GRP, Granite Real Estate. These two companies are companies that, like I said, I recently bought GRP. I've been loading up on Stag in my TFSA this year. Really recommend buying these if they dip probably back down below that 37 mark. It kind of gets attractive here, but it'd be nice to pick it up on the highest yield you can. Scrolling down to the meme stocks, because obviously I could talk about all these companies that are just getting devastated today, because this is a general buying day in my opinion. But GME, the meme stocks, not getting hit nearly as hard as I would have expected either today. I'm really shocked at how well the meme stocks have been holding up. Absolutely incredible for that kind of momentum trading, because I honestly think for as long as these companies hold up, it's mostly momentum in retail from Wall Street bets. So I'm kind of shocked considering that these companies are trading way above any kind of underlying value. But that's the argument with Tesla. That's the argument with all these growth stocks. And man, do I get grilled every time I bring Tesla up in a conversation, because people are so polarized around that stock. So I'm glad I got into it in that good range there. Not that I had the balls to be buying something like a GME or an AMC here, but yeah, guys, I gotta pass the question off to you. What are you buying in these markets? This is one of the most aggressive drops we've seen. The markets are choosing to be a lot more volatile from the Chinese rhetoric, the Jerome Powell rhetoric, the Treasury rhetoric. Whether this continues, this is usually a slump month. This is the September slump. So we'll see what happens. It's again, it's an annoying period in the market because earnings are still a month out. So until earnings come out, we don't know exactly if these drops are justifiable, if we're going to see Facebook get hit because, you know, they can't do targeted advertising anymore through any Apple products. You know, what does all this say for those bottom line revenue earnings? And is this truly a good dip buy opportunity? Well, for me personally, I'm always looking 5 to 10 years out, but you know, whether it is today coming into the next quarterly earnings, we will be finding out. And that's something you're going to want to stick around for. So consider subscribing, folks. And in light of all of this, and as most important, the most important thing, stay cool, stay awesome. And I look forward to catching you in the next one.